Impressive last couple of days as this asset reaches back to its weekly high of 24 cents. Immediate short-term timeframes suggest a potential pullback before an upside continuation, and today marks the quarterly close, which may be signaling a macro shift to the upside. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol TTOO. What is up, you guys? Thank you so much for stopping by once again. Let's dive straight in to ticker symbol TTOO. And what we're looking at here is the bi-hourly chart. And I wanted to go ahead and just touch down first with the moving averages here, right? We have the EMA 9 over the EMA 21, which is usually a bullish signal. And we're currently testing the validity of support from both of these moving averages. I am saying both because I do expect price action to kind of pull back a little bit more here to test this SMA, to test this EMA 21 before that continuation to the upside. And the reason I can tell that we may be able to get this test is for a couple reasons, actually. First of all, let's go ahead and just touch down on the RSI here for the bi-hourly time frame. And you can see that the bi-hourly time frame RSI signal is actually approaching the gravitational zone of the bull weakness percentile, right? So usually this gravitational zone here, just like the other ones on the top side, right? These gravitations pull the asset to the downside. Now, the good thing is that we have the SMA 14 located right down here with an upside pivot, and it's in the opposing side's gravitational zone, which means that we would be finding a gravitational pull to the downside for ever so slightly on the short-term time frame to find support from both the gravitation and the SMA 14 before a continuation to the upside. We're actually getting, I can definitely see here that we have a little bit of release from the bull pressure, but nothing like this iteration here, right? In fact, this is still pivoted towards the upside, and it looks a little more forgiving than this pivot does. Stochastic momentum is actually supporting a downside continuation for the bi-hourly time frame. So what I'm expecting here is that come Monday, we may be experiencing a little bit of volatility here, specifically towards the downside, but with good reason. And I do encourage it. And why would I encourage that? Why would we want to hear that? We don't want to hear no downside. We don't want our asset to face a downside, right? But there is a specific reason, and a very bullish one at that. So if we follow that RSI with the bi-hourly time frame RSI downside, as well as the stochastic momentum, that's leading to a potential rhyming target here to the EMA 21 at 2049, right? So this would actually encourage a very bullish formation as well. Now, what is that formation? Let's go ahead and just kind of highlight that right now. We have a little bit of a silly inverse head and shoulders right here, right? So you can see that shoulder here, head and the right-hand shoulder could potentially be built right over here, right? So this is a bullish formation. It does signal a potential upside continuation. And also we are able to measure its we're able to measure its, what is it called? The price objective, right? So let's go ahead and just do that now, as I do expect this to have, actually, yeah, it does have a little bit of a slanted neckline, but it's entirely okay. It's no problem, right? Let's see. Yeah, I think we may, and if I combine bodies, maybe. No, I think this may be the neckline right here, right? So let's just go ahead and take a trend line from the neckline all the way down to the lowest part of the head, which is right down here. And then this gets applied to the middle of the right-hand shoulder. So this is this is the shoulder here, right? And we have this shoulder right over here as well. So the middle of it would be around here-ish, right? Let's just say that this let's just say that this is the middle here. But in fact, actually, since we're suggesting a downside, that would be the following candle. So yeah, let's go ahead and apply it to the next candle here. And that's taking us to a target of about 35.78. Okay, now remember that this is a psychological formation. It does suggest an upside, right? And it's generally bullish, but also it has a little bit of a lesser strike rate in the bi-hourly time frame, as it's a small time frame, but still it's being built here, and it looks like we're about to get that validity from the EMA 21. The EMA 9 crossing over the EMA 21 which would serve as a pretty nice bounce area for a continuation to the upside here. So that is what I'm looking at here for the immediate short term. Let's go ahead and move on to the next chart to see what else we have, right? So let me just go ahead and highlight that one more time. That's 35.78. Let me see if I can get close to that. 35.77 is good enough. All right, so we're gonna kind of mark that off there, and I actually see already what the range can be, right? So let's go ahead and kind of note that down. I'm gonna get rid of these previous lines because I feel like we're gonna need a fresh start, considering the amount of pressure being built over the last few days here. I'm not saying it's bad; it's actually very good. So this is it feels like a good time for a TTOO, right? So let's go ahead and mark off that range right at the top side so that we are all in the same page. I expect price action to eventually reach this range here where these top wicks are, right? So that's where we're gonna know. That's where we're gonna mark this off, just right about here at 34.82 to, of course, that top side that we just spoke of 35.78. 77 is still fine, right? There you go. So we're gonna go ahead and kind of kind of observe this as the time moves. So now let's take a fib retracement from the top side of the swing, right? So we're going to do swing high to swing low here with a Fibonacci geometric sequence. Let's see if we can get some of those 618s or 372 targets right up at that target. And what do you know? Two spot 272 landing right in that target that we're talking about, right? As we're scrolling this up, we're saying let's go ahead and see if we can get one, one of the 272s or the 3618s, of course, a two spot 72 landing right at about let me just kind of zoom in like this. There we go. 3509 is the two spot 272. And of course, the three spot 618 is located right up here at 3891. Upon an upside continuation here, we could face a little bit of a pullback on that way up, right? Which would then suggest a retest of the break of this resistance level. So what I'm saying here is that price action can essentially do this, right? So something like this will get that bounce from the EMA 21, and I'll show you another area that we're going to bounce off from that's going to be very bullish, right? So we're going to have two shots at this, right? I'm talking about a retracement. It may actually happen at the 2603 area, right? Like this, but it also may happen from the one spot 618, as it does have uh, a lot of rhyming to this position here, right? So potentially like this, right? And then from here we would pull back into this area here, back into the head and shoulder highs, so that we can validate it as a valid support before continuing onwards and upwards, right? So I suspect that price action can kind of behave like that. And it would be a very interesting upside because I am essentially suggesting that the EMA 21 would be bouncing off of the golden pocket here on the bi-hourly time frame, and that golden pocket located between the knot 382 and the knot 618 Fibonacci ratio, very bullish area to retrace in and then bounce from. So this could be the loading zone here, 1996 to 2142, before an upside continuation. Let's go ahead and just mark off this area as green because this would be the go zone right before we continue on to the upside. First take profit here. Of course, we may actually experience a one spot 618 pullback and then eventually reach this target of about 3482 to 3577. As you can see here, it's very possible for this asset to reach from maybe the knot 382 or the knot point 5 fib, all the way up to that 618 in one sitting, right? But this may actually be the span of about 2 days or an effort of about 2 days. So it's still looking very nice actually. So now what I want to point out here is actually the fact that we have actually a few drives, but I pointed out just one here because it's there's actually a few of them printed, and we don't we don't need to know more than one. It's just we're getting some regular bullish divergence here, and regular bullish divergence or divergence in general is the opposition of price action versus momentum, and momentum represented by the indicator RSI, relative strength index. So what you're seeing here is actually a valid, already confirmed drive of regular bullish divergence in a very large time frame. This is the span of about 250 to 270 days, right? So a full trading year right here, creating higher lows, and price action creating a series of lower lows. So that equates to that drive of regular bullish divergence. This is definitely powerful and suggesting a continuation to the upside, and it's very curious since it is also paired with this inverse head and shoulders for the immediate short term, since we do have an upside. However, I must say that there is to be oh yeah, right here's that little bit of a pullback, right? We'll get the daily time frame to reach up to 46%, which would then line up with our short-term upside, right? Either to the 1.272 and the 1.618. Honestly, what I'm seeing here is that we could face the higher likelihood at the 1.272 at 2603 before a pullback into this area of 2343, right? So let's go ahead and move on here and take a look at a couple other things, because I do suspect that we have some bullish signals here from the ARC indicators, and that would be oh, okay. So yeah, we're still reverting here, but the 12-hour time frame or the 8-hour, let's see what they have to offer. Okay, 12-hour time frame does have a drive here of bearish. This is a bearish engulfing. This is essentially giving us that downside that we're talking about right before we continue on to the upside. So that's still looking okay there too. Okay, 8-hour time frame also facing that bearish engulfing, which would then just give us the downside so we can reload. It's giving validity to our initial play. And here's the downside on the 8-hour time frame RSI. We'll get that downside to the gravitational zone here of the bear strength percentile, but also we would face that support of gravitation with the SMA 14 bounce to the upside. That's looking very, very promising. And let's see as we shorten the time frames here. Okay, 6-hour bearish engulfing as well. Lots of bearish engulfings here, and those are all giving validity to our play to reload at the downside here before a continuation to the upside. As I do suspect that it would be, it's going to be kind of a tough Monday, right? But usually, Mondays are usually bearish in the broader markets here, but this essentially could resolve on Monday as well for a potential correction. Now, notice here the 3-hour time frame, the Armor algorithm that we just released is giving us a long signal here. So if we had followed the Armor strategy, then we would have entered the market here at about 1779, eventually reach a top side today of about 35%, and we are currently sitting at 19.67% to the upside based on the Armor strategy, right? The firing of the signal on this long signal right here. And I do have to say that Armor is the one with the secret sauce, right, for the buy and sell strategies. And it is looking very promising thus far. Okay, team, so let's go ahead and just take a look at the last chart here. And this is the quarterly chart close. We just got the monthly closure, the weekly closure, the bi-daily, and the daily closures today. And of course, the 3-month closure being the quarterly, right? So why I find this to be incredibly important is because of the reaction that we're going to face on come Monday. And the reason why is because you can see here that we have been critically oversold here over the span of these few years, right? Since 2020 all the way down to present day. And you can see here that this is clearly the first green candle that has broken market structure here. So we have broken the high of the previous quarterly chart and a quarterly candle or quarterly close, right, with this top side of around 69.11 or 70 cents, right around there. That is a complete break of market structure, and that is going to essentially tell us what may be happening here for the continuation of the asset, as we are at max volatility right now with a potential curvature to the upside here. Since we did get a huge recovery here, quarterly stochastic momentum may start pivoting towards the upside, which then would make a whole statistical move here, and then this would be a whole macro V-shaped recovery shift. Okay, team. So let's go ahead and just try to see if we can finesse let's see if we can finesse this information here. We're gonna go ahead and change the D%, which is the which is the exponential. I was gonna say the E3P for as an exponential 3 period. So that is your 3-day exponential moving average. We're gonna shift it to a period of 1. And with a smoothing factor of 1 as well, to see if we can get an early indication. In fact, the early indications right now are just giving us flat bottom, right? That's because it hasn't read whatever has happened here just yet. We just closed this quarterly, so we're going to face the effects of this come Monday open, right? So as soon as we get that, team, we're going to be observing this as a potential upside continuation. And I think, yeah, I think now you know the targets, you know the play. I think everything's looking good. If you have any questions, you know where to reach out to me, right, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence. Everything will be cool. But with that said, team, I wish you well a very good weekend, and I will catch you at the bell on Monday. Adios.